In this video, we're going to talk about some of the biggest mistakes we see from fix and flip investors here in Florida. If you're looking for a loan for your next project, we're happy to help mitigate many of these issues that we're going to talk about here in this video during our regular underwriting process.
We're looking out for the legal side. We want you to be successful. We understand that these things are really important, and we want to make sure that you understand they're important and that you've thought about those things. So we're always looking at it from a different perspective other than just, should we lend to this person on their project? Should we give them money? We're making sure that legally everything is right. And on an engineering permitting side, we're making sure that you understand what this project's gonna take. So we like to give a holistic helping hand to the borrower's project. If you don't understand the carry costs for the life of the project, you may come to a point where you either run out of money, you might need to ask someone for money to borrow, and you put an unneeded stress on yourself. Carry costs typically are the interest payments that are made on the loans while you're doing the rehab of the project. There can be other carry costs depending on when you buy the project. It could be property taxes which come due while you're still in rehab. It could be insurance payments are due. But generally the main carry cost is the interest payment due.
The carry cost, the financing costs during that period of time when they own it often get overlooked or even undervalued. And the other thing they don't always think about is closing costs on both ends. So there are other costs other than just the purchase price, the rehab costs, and then the sale price.
When people don't understand that there's going to be a carry costs in the project, the issues that can come, the biggest one is you run out of money. You have money set aside to do the actual rehab of the project. It's going to cost money to pay on the loan while you're doing that. It's already stressful doing the rehab. There's plenty of things that can come up that maybe not make that go as smoothly as you anticipated. But running out of money to pay the carry cost of the project is another added stress that pulls you away from actually doing the project. You've got to resolve, what am I going to do here? How am I going to make these payments? Every borrower that comes in, we always talk about the project a little bit and make sure that they understand the importance of knowing what their carry cost is going to be, knowing what the timeline of the project is going to be. And that way they're more prepared and there's no surprises for them and for us. Generally, it makes the projects more successful. Our goal is to have our borrowers be successful.
The expectation of a timeline is very important for some of the same reasons. When you're borrowing money every single day that you have the property, there is an interest calculation to that. You are paying money to have that property every single day. You may be paying water and electric bills every single day. So if you say, oh, this is an easy project, we're going to be in and out of this in 3 months, and that's how you budget it, maybe you can't even get the rehab done in 3 months. Maybe there's a tenant in there that you have to get out. Maybe there's permit issues that slow you up. Maybe your contractor doesn't show up and you got to go find a new one. There's all these contingencies that come up with timeline, and you're paying money every single day that property's there. You also may think you're going to sell it in the first 2 weeks it's on the market, and it ends up on the market for 6 months. Maybe you overvalued the property when you put it on the market. Maybe you didn't do the level of finishes that would be required to sell in that particular market. So you've really got to understand where you're selling at and what your goal is up front. Otherwise, again, you are paying money every single day that you own that project.
If you're going to be using private money lending, you need to understand the monthly cost of the loan. You need to understand, what is the duration of this project? Do I have enough money to get me to the end, not only for the rehab, but to pay the interest on the loan, to pay any taxes that might be due? It takes a little more upfront work because you need to study what you're going to need to do to complete the project. And probably one of the hardest parts is people being honest with themselves on the finances. And I think people struggle with that just in general in life. A lot of times people don't want to just put it on a sheet of paper and be honest about, can I do this? How much money do I have? Will I make this work? So if you're not fully prepared for the project, it could be disastrous. You could get to a point where you run out of money and you're not sure what to do. You need to understand everything up front before you go out and you buy that property.
So A general flipper might be putting 20-25% down plus their costs of rehab. So on a $200,000 purchase, let's say, you're putting in 50 grand plus maybe another 30 to 50 grand fixing it. So your cash is 100 grand. And when you go to sell that, you're hoping that you're making 50 grand on the back end. So you got a 3 to 6 month turn on the property, and you're looking to make, 50 grand on 100. So your rate of return is high. Now you got to do a good amount of work for that, but you can certainly make more money flipping than you could in some of the other avenues in real estate.
People that are just getting into fix and flip, they don't quite understand the permitting process, generally for rehab. Now, some rehab projects are very minimal. You may not encounter going through permitting. Now, I will say those projects generally don't return as much money on the investment because they're a little bit easier to do. Now, what most people don't understand is if you're getting into a rehab project where you're dealing with any structural issues a house might currently have, or if you're trying to change the layout of the house and you maybe affecting certain beams or columns within the home, you're going to encounter permitting. So what does permitting look like? Well, when you're dealing with some of these bigger issues, you're going to need to engage an engineer who's going to have to draw plans, provide specifications for construction, and these are going to have to be submitted to permitting agency. It could be the county, it could be the city. Once the permitting plans are reviewed by a permit reviewer, they're going to provide any kind of questions or comments or revisions that are required. So again, you might have to get back with the engineer and make those changes. Now you have hopefully a set of permitted plans. Now you're going out to construction. The contractor is going to have to construct what's on those plans. And again, this is all part of the greater permitting process. So as the contractor makes those changes, those repairs, inspectors are going to come out from the city or the county and make sure that things are done according to plan. There's a lot of times where you might have a contractor that does something differently because it's cheaper for them, depending on if you're the contractor or if you've engaged someone as a contractor and how you're paying them. They may try to cut corners and save costs on their end, which can create issues during inspection. The worst case scenario is an inspector tells you got to rip up everything you just did and redo it all. Now that's more costs, that's more time. Now we're getting back to the time thing on your carry costs and other issues. So you need to understand what the project's going to require, because every project's completely different. If you're purchasing the property, you don't already own it, there's going to be title costs to ensuring that you have clear title to the project. Sometimes people don't take into account the cost of purchasing. And then also the cost of selling the home, if this is going to be a fix and flip. Generally on the seller side, there's more costs. Typically you have to pay a buyer's realtor their commission, title fees to transfer their property to the buyer. Those are all costs that you need to factor into your financial plan for the project and make sure that it's worth the profit after paying all these to do the project, because you don't want to take on a project that you're not going to make any money on. Once you take a project on, you really need to complete it. So if that project isn't profitable, but you've wasted time when you could have found a different project to work on, and hopefully it made some profit.
Everybody looks at a property and says, oh, it costs X number of dollars to buy, X number of dollars to fix up, and this is what it's going to sell for.
There's a lot of people out there that want to get into real estate and they're not quite sure exactly what to do yet, how to get involved. There's a few options out there. You can go out, find a property that needs to be rehabbed, be the actual fix and flipper, where you purchase a property, it needs rehab, and you fund the rehab, you fix the property up, and you sell it. That's one main option, and I think most people understand that and know about that option. And it's a great option if you have the time to do it. You don't necessarily need the expertise right off the bat because everyone starts from zero. But obviously, the more you know, the more likely your project is going to be successful. The pros with that's the highest return. If you could find a property that needs rehab, fix it up, you're going to get the most return on your investment and the time it takes to do that. And that could be anywhere from a couple of months to a year, just really depends on the rehab. That's the pro for that. The con is the time. You need to actually be active in the project. A lot of people don't have the time to put into being at the project site, making sure that the workers, the contractors are doing what they need to be doing. You need to understand the finances of the job. So a big issue right now in Florida specifically, maybe other places in the country, is insurability of property. Insurance rates have been dramatically increasing. It can be difficult to get insurance on an investment property, especially one where it requires rehab. Insurance companies will go out, they'll inspect the property, they'll decide whether or not it's insurable. You need to make sure that you can get insurance on the property while you're doing the rehab, and especially understand that you need to do the rehab that's required to make sure that the end buyer can insure the property. That's probably the most important thing. The insurance companies are much more strict on their inspection of the property, what type of wiring is in the property, how old is the AC unit, what's the age of the roof. You want to make sure whatever you plan for this property that it's going to be insurable when you sell it to the buyer, because most of our buyers are going to be getting a mortgage. The bank's going to require an insurance. If they can't get the property insured, they can't get their financing. Every contract always a financing contingency. If they can't get financing, then they can walk away from the contract. So you may find it difficult to find a buyer if you've decided to maybe cut some corners on certain things that the insurance agency is going to be looking at when they come out to inspect the property for its insurability. When you borrow from Boyd, we want you to be successful. Your success is our success. So we always provide some critique and some detail on aspects that maybe other lenders can't.